Hey guys, this is a market update. Bitcoin is in a dangerous position right now, struggling around the 40,000 level and breaking through this. So not the best price action short term. However, this price action over the next few months and through the halving is vital. And it's going to be very constructive for the next phase of the bull market, which is, in my opinion, when we break into new all-time highs. We're going to look at some on-chain data and halving data, which is vital because we're coming right into this. And then we're going to look at some macroeconomic data towards the end of this video, because it's the central banks that are going to push us to new all-time highs. And that's the next phase of this cycle. What we're seeing in the Bitcoin supply right now is a huge change of hands, right? The Grayscale Bitcoin Trust, one of the biggest holders of Bitcoin, now it has liquidity because it's an ETF. And so you're seeing the bankruptcy estates from FTX and others sell out because they have to. Other traders that were trapped in there, other people selling out because they were in much lower and made the trade. But that Bitcoin is getting parked with new long-term investors. And so this price level, this cost basis around this level is vital to have. You need to clear them all out around this level. And then this price level, the average cost basis where people are getting in, eventually those sellers will stop and the demand side will pick up again. And that coincides with the next part of the halving. So this is great constructive price action, in my opinion. And certainly if you're looking to allocate to BTC, you know, these are the levels, right? These drawdowns, these kind of weak periods are the levels which actually give you the best returns. If you do trade, check out Bybit, $30,000 deposit bonus, link in description. You can check the details via the link below. Bitcoin is reacting in this cycle just as it has done in every previous cycle. The price action as of right now is exactly the same. We are in a recovery phase. You can see the distinct phases of each cycle laid on top of each other. Expansion, contraction, recovery, and time is running out. We have a few months left. The halving will occur. And you can see for a month or two, nothing really happens. And then after that, you get these huge moves, the expansions and the new all-time highs. That's what I want to be in for. So this price action is perfect. We have a new high for this cycle that we touched and a little drawdown. Ideal price action. Great to be active right now. We can also see from on-chain data, this happens in every cycle as well, where you have a big price move, and we've had a great move, right, in this recovery phase. And we have sellers coming in, which is obviously normal, and the FTX estate selling out and all of that. But these new investors are coming in as well. Each time after the recovery, you get this shakeout. This is net unrealized profit and loss. So you can see 2012, 16, this is kind of one because it was a pandemic. You can see that here, and we're doing it now. You get this shakeout where you have a lot of people that have made good profits in that recovery phase and want to take some profit off the table or whatever. You get a little shakeout of traders. That occurs before the actual bull market, where you get a huge rise in price, and then you get these blue periods, which is the whole entire market in a profit. You can see each and every time you get this shakeout. It makes sense. People were buying in at lows for whatever reason. You know, people are uncertain about what's coming, but it happens in every previous cycle, and we're getting a little bit of that here as well. This is not the time, if you're an investor, to sell. You obviously sell at these peaks and these highs potentially if you want to sell, or just keep allocating. So we're following very similar cycles and very similar price action to every previous other occasion that Bitcoin has been in this position. I want to touch on Ethereum here as well, because the price action again is very, very constructive. So you have the drawdown from the previous bull market, higher highs, higher lows, just forcing up. Now we touch the highest price that we've been to in this cycle. Of course, we're going to get a drawdown. You can see this support level here would be around the 2000 level, but maybe we don't get there, who knows? But it's very, very, very strong price action here. Of course, we're going to get some profit taking, and just a little drawback here because we're not in that phase yet of the central banks going crazy, but we're getting there very soon. Just to touch on that, you can see how strong Bitcoin and Ethereum are as well. So this is from 2016. You can see as Ethereum gets invented, it brings up a lot more of the market. Now you have non-BTC Ether as well, XRP and some others. Non-BTC ETH is not really taking a lot of market share. So for me, looking at this data, what I can see is that Bitcoin and Ethereum are really strong, and they are just solidifying the value that they have. and sucking up most of the value and premium in this market. And the other altcoins are really struggling to find that premium. Bitcoin and ETH are like 70% of the market share right now, right? The whole of crypto. And it looks like Bitcoin, right, despite challenges, is remaining very strong through cycles. Ethereum is actually gaining some market share too. Non-BTC and ETH, despite having all of these tokens and all of these projects launched, are failing to get that premium that BTC and ETH are. So that's why BTC and ETH are still, I think, the absolute basis of a portfolio. You can see that here. Non-Bitcoin and ETH market share is basically flat since 2017-18. Despite all of these projects coming on, despite all of the hope and everything and trading and this and that, they are not taking market share away from Bitcoin and ETH. So it's really important data. I just want to highlight that in this video. Crypto may be a bit rocky for the next few weeks, maybe even months. I believe it's a shorter term correction within a longer term upcycle. The reason I say that is because economic data seems fairly weak right now. The data is kind of weird because you have such huge fiscal deficits and debt creation that is kind of pumping up inflation and how the economic data is actually shown. But under the surface, the economy is not like super strong, right? And so you're seeing employment data here pretty weak. And that would indicate a bottom of a cycle where central banks have to be a bit easier, right? Of course, if this continues down and gets really bad, then that's not good for markets and you get the worry and the contagion. But we know what happens after that is the money bazooka. And that's the Bitcoin cycle, just slowly taking chunks of value out of fiat currencies in cycles over and over again because it's strong and they debase the currency when weakness occurs. So that's what I see playing out. In China, huge disinflationary pressures, deflation in some parts of the economy. They need to show a willingness to pump prime a la Draghi style, right? Anything it takes. Potentially huge stimulus coming there because of disinflation. China's usually a leading indicator. And then we're seeing the liquidity cycle, right? So it looks like we've bottomed, right? These liquidity cycles are really important for crypto because prices tend to follow this, very, very closely. Looks like we're getting an uptick in liquidity, which would be positive for crypto prices. And of course, if China pump in trillions to stimulate there, then that's going to drive the liquidity cycle up further as well. Leading indicator, potentially this is coming to Europe and maybe the States as well. Of course, the States is the strongest as it always is, but you're seeing this cycle play out as well. This also is the Chinese 10-year versus the dollar index, and you're seeing these cycles play out again. So you're seeing when this crosses down here, right, that is usually when you get a big move in BTC because what we're seeing is these cycles play out, right? So the cycle here, another uptick in the cycle. When we get this crossover, that's the big bull market for BTC. Another crossover, the previous bull market, and then another crossover that we've just had. So seeing how the cycle is playing out with the halving, potential weakness in the economy, which is driving the turn in the rate hiking cycle to cuts, right? Potentially easier policy. There's a ton of volatility to come, but these cycles play out over years. And it looks like we're playing out the same as every previous cycle. So it's very hard to be bearish here. And it's very easy to just take this weakness that we're seeing right now and try to allocate around that and get a decent price. You can look at the deposit bonus to Bybit down in the description as well. The Crypto Investor course has just been updated. So if you want to look at that and get involved, I'll leave the link below. I'm James, it's Mazzy G. Cheers for watching, and I'll see you in the next one.